Okay.
All right, good deal. Well, look, thanks everybody for attending today. Before we get started, I want to just make a couple of announcements with really kind of two events we have coming up. One, we've got CCIM 102 that's in New Orleans, April 4th through 7th, and you can kind of see it as these banners scroll through. But Mark Seibert and Bo Barron are going to be the instructors. Those are two really good instructors. Bo is an extremely sharp guy and an excellent teacher, and Mark is as well. So if that's something that you have, if you're trying to work towards your designation, a great chance to get that class under your belt. Or maybe you have somebody in your office, a young broker, give them a nudge, encourage them to go. With the offerings this year by the state chapter, you can get 101 and 102 knocked out, in New Orleans. So that's a pretty good progress towards your designation. The second announcement is our crawfish boil and our state of the state kind of economic summit, I guess you could say. We had great success with that event last year with having it at the Port of New Orleans. Really cool venue, really well attended. And this year, what we're going to try to do, instead of getting brokers from the different markets, we're trying to recruit economic developers from the different markets. So I think we may have somebody from NLEP. I think we're going to have somebody from Lafayette. GNO Inc., I believe, is going to send someone. We're trying to get someone from BRAC as well. So we think it could be a pretty good panel and will be a really good event. So would love for you to attend that. So it's not too early to start signing up for those things. I know as a brokerage community, we like to wait until the last minute. I'm guilty of it as well, but we love to have an idea of numbers ahead of time if we can. But so those are kind of the house cleaning items. And so we'll go ahead and get started. So look, thank you for joining us for this first virtual roundtable. My name is Evan Scroggs. If I haven't met you, I am the 2022 chapter president. When we met kind of as a group last fall, we identified that one of the things we needed to do better as a state chapter is kind of leverage our network and provide education opportunities to our membership. And so, we feel like this is a really good kind of venue and format to do that in. For today's roundtable, we are joined by two of our chapter's annual sponsors. So, as well as other CCIMs that are part of community banks and credit unions. Our discussion today will focus primarily on best practices and the things we can do to get our clients' deals closed. So let me introduce our panelists. We've got Alex Mahon, who is a vice president and the market leader for Baton Rouge with Louisiana National Bank. Alex has over 13 years of commercial banking experience and has closed more than $350 million in loans. Alex received his undergraduate degree from Drury University in Springfield, Missouri, and his MBA from University of New Orleans. He resides in Baton Rouge with his wife, Shannon, and their two kids, McKinley and McCoy. Louisiana National Bank, a little bit about them. They're a family-owned and operated community bank that's based out of Ruston, Louisiana. They've been around since 1905. They're a full-service bank with 8 total bank locations, 7 located along the I-20 corridor from Monroe to Arcadia, with their newest bank branch being located in Baton Rouge. So they're just over there on Corporate Boulevard. Currently, they have $335 million in total assets, of which approximately is 80 to 85% in commercial real estate related loans. So that's Louisiana National Bank and Alex Mahon. So Alex, thank you all. Thank you for being here, and thank you for being a sponsor. Joe Cochran, so he's our other panelist. He recently joined the Xplore team, so Xplore Federal Credit Union, in November of 2021. He's a native of New Orleans, and Joe currently resides in River Ridge, where he's lived for the last 12 years. He's serving now as the Director of Commercial Lending, and Joe brings a wealth of knowledge to the Xplore team with over 10 years of business banking experience. With Xplore, Joe utilizes one-on-one time with local businesses and business owners to discuss credit solutions that are tailored specific to the specific needs of those businesses. Most importantly, though, Joe is committed to providing the highest level of customer service that adheres to industry standards. Outside of the office, Joe likes to play golf. He likes to fish. He's into woodworking, which I can get on board with, and restoring his 1950 Ford Custom. A little bit about Xplore. Xplore Federal Credit Union has been serving the community since 1947. Originally established to provide financial services to New Orleans Shell Oil Company employees, Xplore SCU became a community charter credit union in 2013. Xplore serves over 8,000 members through 3 local branches. They have advanced e-services and co-op shared branch network. They provide exceptional customer service and products for all stages of life. They offer innovative financial solutions. Xplore SCU surpasses member expectations year after year, and Xplore SCU membership is available to anyone living, working, worshiping, or attending school in Orleans, Jefferson, or St. Tammany Parish. So guys, yeah, thank you all for being here. Thank you so much for being on this panel today. So I guess as we get started, we really kind of broke this down into 3 different segments on questioning. First, just a couple of questions about kind of your company, you, that sort of thing. We gave you an introduction, but we want you to be able to kind of tell us some about yourself as well and what you're doing. Then we'll look at the lending process, and then we'll talk some about market trends, in particular lender appetite for deals right now that y'all are seeing. So I guess when we get started, maybe Joe, starting out, tell us a little bit more about your company and talk some about the unique value that you and Xplore can bring to a commercial real estate transaction.
Yeah, so first and foremost, thank you. Appreciate it, you guys having us join. Certainly, the biggest thing I think we can say for Xplore is, we're fairly new to the commercial lending world, but the biggest thing that I would, emphasize to you all is we are very aggressive in trying to win deals. So we're certainly trying to put our stamp on the market, increase our footprint as well. So, any sort of deals that you feel may be a good fit, or if you want to just run different scenarios by us, we're certainly willing to go through whatever options may be out there. So, a lot of different agents will reach out to me and just basically say, hey, this is the high level discussion of where we're at. This is what we're looking at doing, whether they have any deals present or not. And then my goal always is to eliminate as much back and forth as possible. So we try to make sure that we get your folks an answer very, very quickly. I'm actually working to even reduce that time frame down as well. So, we're trying to be as fast and efficient as possible to where we're closing these for you guys. Obviously, we still have some restrictions with appraisals and such, but that's the biggest thing is Xplore does have that local decision making, where if we have a deal that may be a little borderline, or there may be some, as they call it, hair on the deal. But our local decision making, our loan committee is able to dig through those, and we look at it from a logical standpoint. And if the deal makes sense, we certainly will sign off on it. So get us involved as early and often as possible, and be more than happy to look at anything that you guys send our way.
Yeah, great. Thanks, Joe. Alex, maybe tell us a little bit about, Louisiana National Bank. I know you are kind of new to the market, and, tell us something, about unique value y'all kind of bring to commercial real estate. I see y'all have y'all like commercial real estate based on your portfolio. So
yeah, and like Joe mentioned, thank you, Evan and Amy, for including us today. Exciting day, obviously. The Fed just came out and raised rates, and so there's lots to talk about. So thank you for including us. But yeah, like you mentioned earlier, Louisiana National Bank has been around for over 100 years. So we're a small community bank based out of Ruston. And with that comes experience and knowledge of and the wherewithal of knowing what we what type of assets and what things we think we're good at. Obviously, real estate is one of those assets. So myself having over 13 years worth of commercial banking experience, I understand some of the issues that you guys face on a day-to-day basis. And my goal is to partner with you guys and as Joe mentioned, kind of work with you guys and hopefully make the process as seamless as possible. But I think at our size, right, like Xplore and LMB, we have the capacity and the knowledge and we're not the big banks that some of your customers are used to dealing with. We're very flat, right? We have the decision makers that are close to us, which allows us to move quick and to help, get decisions made for your client and hopefully in a timely manner. So whether it's good, bad, or indifferent, you guys know the direction that you're going with a particular deal. And at the end of the day, we all have the same goal of obviously trying to help our client, but also trying to close the deal. And so I look at it as, LMB is a great fit for myself. We do a lot of real estate, like I mentioned, and our goal is to partner with you guys and with the end goal of hoping to close the deal in a timely fashion.
Awesome. Thanks, Alex. So maybe as a follow-up to that, and Joe, I'll let you answer this in a minute too, but maybe just tell, a little bit of the difference between, let's hear from the banker what a distinction is between a bank and a credit union, and we'll let Joe kind of answer that as well.
So to me, the biggest difference between the two, so from a credit union standpoint, we're not as concerned, as weird as this is going to sound to a lot of folks, about the profit side of it. Most of our profits are reinvested into the actual credit union, and that in turn allows us to offer a little bit lower rate, maybe less on fees, just different things there for our members. So for us, that's one of the big draws. The other caveat too, which is a little different, is membership for us, as Evan mentioned, and it's kind of funny when you read it, I get it, but work, live, worship, go to school, those kind of things. I've even been told if they know someone in this area, so if you have family in a footprint, that's really the biggest thing between a credit union and a standard bank that we all know. That's the biggest difference. I mean, there's not a drastic change between what Alex offers as far as rate is concerned versus what the credit union may offer. But those are the two biggest differences, and where we kind of have slight edge on maybe some local banks, whereas the credit unions. Another big thing too for us is we don't have prepayment penalties, so that doesn't apply. I know that's a big deal for a lot of clients. So, with us at the credit union, we don't have those set in place. So if you have clients that are worried about that, certainly let us know. Let them know, I should say, that there is no prepayment penalty involved for us. So, but that's just a few of the differences. And I'll let Alex talk more about the bank side, and he can dig into that for you guys.
Yeah, so Joe mentioned it, right? Nonprofit versus profit. Or a for-profit business. So a bank, we have shareholders that we're responsible to answer to. And I think what that allows us to do is we might evaluate credit a little bit differently when underwriting a transaction. We got to make sure the deal makes sense both for the customer and also for the bank. So we are not going to jump at every opportunity. We'll definitely evaluate it, but we're not going to jump at every transaction. Pricing, I'm sure we're comparable or compatible and competitive with a credit union. But like Joe mentioned, nonprofit versus for-profit, that's the distinct difference between the two. And I think that relates back to how you evaluate risk and when you underwrite a transaction. So whether we might be a little bit more conservative or aggressive, I guess it just kind of depends on the transaction or the borrower or guarantor that's involved. But that's the main distinct difference is a nonprofit versus a for-profit, which translates to how you would evaluate a transaction.
Sure. Good. Yeah. Thanks, guys. That's helpful. I guess moving on to lending process. Alex, maybe talk some about the processes that are involved when working with your organization as far as financing a commercial real estate deal. I mean, most of us are familiar with it, but maybe just kind of walk us through and maybe some things that you know are unique or specific to L&B. And I can tell you from personal experience, L&B closed the deal for us at the end of the year that they were super quick to kind of get, take the reins up from a big national bank that just couldn't perform. And so they were great to work with. So maybe talk some about that process, Alex.
Yeah, thank you. Yeah, so I think the first phase is obviously having a conversation with the parties that are involved of the particular transaction itself, and obviously what are the goals of the borrower. From what I like to do is once we get a clear understanding of the transaction itself, is issue some sort of term sheet to the borrower. That way the borrower has a clear idea of what they should expect from once we get the transaction or the credit approved. Assuming that the borrower agrees to the term sheet, obviously we're collecting financial information, I'm transferring that information over to our credit admin folks who are going to underwrite the transaction. Depending on loan size, I've received cash flows back from my credit folks same day. Maybe a larger transaction that might be a little bit more complicated. It might take 1 or 2 extra business days, but still, fairly quickly. Once we receive those cash flows, we're putting our loan application together and getting ready for our loan committee meeting, which happens every Tuesday. So depending on when we receive the financial information, we're able to receive an approval fairly quickly, usually within 5 business days, give or take. Once that approval is received, we're issuing a commitment letter to the borrower. Assuming everything is agreed upon, obviously, then we're working on title and appraisal. So, from a loan application standpoint, we can move fairly quickly. If there is a time restraint, for example, we can't wait for Tuesday to come around, we still can move that application via email to the correct board members or loan committee members to issue an approval quicker. So, obviously that's we don't like to do that all the time. We like to, present our loan requests to the board, but we'll move as quickly as we need to. So we have lots of flexibility. Like I mentioned earlier, our management's very flat. So I report to the president of the bank, who happens to be an owner and on most of our committee boards. So as far as receiving a credit decision, which is most likely what you guys are concerned about, we can expedite that. We can move very quickly. We feel like that's a competitive advantage for us in this marketplace. Like you mentioned, Evan, dealing with a larger bank, they were kind of dragging their feet, and the opportunity you sent my way, we were able to kind of turn around pretty quickly. So I think from being nimble, being mobile, that's something that we pride ourselves on, and we feel like we can be pretty competitive with it.
Awesome. Good. Yeah, Joe, I mean, maybe anything you want to follow up there as far as kind of Xplore and, y'all's process and maybe some unique value that's brought when working with Xplore?
Yeah, certainly. So, a lot of what Alex mentioned is very similar to what we deal with as well. I usually take it from the top, so usually I get a very high level, hey, what rates and terms can you offer? Which, that's a great question. And one that's usually pretty difficult to answer unless we start looking at financials. So usually what I'll do up front is look at the, property type, the borrower themselves, how long have they been in business, those kind of things. I do an initial review, and then I'll make a determination, like Alex mentioned, within typically 1 or 2 business days of, yeah, this is a viable deal, or no, maybe we want to look at some additional information, or what, may have some issues to address it with the client at that time. We're big on, speed as well. So we know that how important that is for you guys. So for us, I usually review it myself. then bring it to the chief lending officer. Usually, we have a pretty in-depth conversation about it, and we'll make a determination up front there. And then we typically run everything through our loan committee. So they will, basically stamp, confirm, and say, yeah, we're good with this deal as well. We have the final say, so that's one of the big things that I love about our role and where we're at this point in time. You guys mentioned it. The big banks, I've been there, I've seen it, as soon as one thing pops up outside of the box that they like to operate within, usually that's where deals are stalling, or you're having a bunch of issues and things may fall apart, which, as you mentioned, Alex was able to benefit from that towards the end of last year, and your client was able to benefit from that as well. So that's the big thing for us, is that local decision making, having a very, I feel it puts your clients at a peace of mind state where they know, okay, this is being worked, it's a viable deal, they like it, we're good to go, we're collecting, some sort of deposit to typically cover appraisals and those types of things as well. So we're pretty quick to get everything in motion. So, the biggest thing that I harp on is a little saying, Alex may have heard it before. It kind of goes around the banking world, but, banks like Xplore, credit union, I should say, and then Louisiana National, those, to me, they're still big enough to help, but small enough to care. And that's one of the things that I find, especially in Louisiana, our folks like to have a primary point of contact that they can call, text, email. We're available, and that's what we're here for. That's, to me, the differentiator between the larger banks and us guys, smaller local community guys. So we're able to dig into some of those real small details that, hey, may make or break a deal, and then we're able to work through those and keep the deal moving along instead of dropping it out or whatever it may be. So very simple.
I like that. Big enough to help, but small enough to care. That's good.
Patent pending.
Yeah, I love it. So I guess as a follow-up to that, what can commercial real estate brokers do to help maybe shorten the timeline process, make it more efficient? Like, how can brokers bring value to it to make your job easier and to get deals done quicker? Are there, one or two things where you say, look, if these things are in place, deals go so much more smoothly?
Yeah, I'll answer that. So from my perspective, and I love working with guys, CCIM guys, and I'll tell you why. First and foremost, you guys know who your customer is. And second, you know the ins and outs of the transaction. So I think upfront, if there's a way to address those concerns upfront, right? Like you've underwritten the transaction, the deal cash flows, that makes our life a lot easier. We know going in, based off of some of the feedback you've provided, that there's legs to this transaction. Knowing that information about your borrower or your customer before you engage a bank, I think it just helps expedite the process, and makes for a smoother transaction. So, really understanding the ins and outs of the transaction, understanding the goals of your client, I think it puts you and I both on the same page with our discussions, and we can kind of walk that path together as we get ready to move towards closing.
Good. Yeah, Joe, any thoughts on that?
Yeah, so I'd like to echo what Alex said. I thoroughly enjoy working with CCIM folks just because of that fact of you guys do have a wealth of knowledge around the underwriting aspect. Typically deals that come to us, most of the time, hey, this is what they are cash flowing, this is where things are going, this is the breakdown of the property. I get a ton of information up front, which is fantastic. The more information we get up front, the better picture that we can paint and understand whether or not this deal is going to work or not. So I have a famous saying that you show me the corner of a famous painting, I can't really tell you what it is, but if you show me the whole thing, I can tell you that's the Mona Lisa, right? So most of us can, but the more information we get up front, the better. So one of the things that I've seen from different agents is, they'll tell the client, hey, email Joe. give them a brief breakdown of, the history of your company, and then kind of explain the deal. So that makes our lives a lot easier. As Alex can probably attest to, we're doing some sort of write-up, something to document why we're doing the deal. So that information from a client, knowing that up front, is very helpful. The other part of it is, and I know a couple of guys have probably seen this from working with me, on email strings, I will email your client and ask, hey, what's the most important thing to you? Is it interest rate? Is it the longest term, lowest monthly note? What is it that is driving your decision here? Because like I had mentioned earlier, we want to align our product with that, right? So, and then on top of it, we want to look long-term. My goal isn't always to look at it and say, hey, Mr. Customer, you qualify for 3 million. Here's 2.999, so we like to look, what is the next step for the business? Are they going to develop into the future additional, spaces, whatever it may be, so that we can make sure that we're helping them in the future as well, not necessarily, crunching them or hurting them now where it impacts their future development as well. So that's two things that you guys can do that would be huge benefit to us, and it doesn't have to be a big dissertation. It could be, they can copy and paste from their website, send it to us, let us know, hey, this is what we're doing. This is who I am, years in business, experience, the whole 9 yards. So as little or as much as they want to provide it from an information standpoint, obviously the more the better, but those two things there for me.
Nice. Yeah. Thanks, Joe. Definitely. So just like as we think about best practices, this is more of a commentary coming from me, but one of the things we've started doing that I think really, helps lenders in your situation, and that ultimately I really find that, lenders are just trying to tell the story of the property in order to justify making the loan. We try to provide as much comparable data as we can on the front end, where it's like, look, if we were on the listing side, when we put together our proposal, to list this property, this was the comparable data we used. This was our valuation matrix. This is how we arrived, at the particular list price. And, this is where, the sales price that we've agreed to falls within, that valuation range. And so I found that really kind of greases the skids to help get deals done a lot faster, and limits the number of deals that fall through in underwriting.
And another point to that, Evan, is, I would suggest, and again, this is just my opinion, folks that you guys are working with, if they have a list of maybe 3 or 4 banks that they've narrowed it down to that they want to do business with, it's good to know that, right? Instead of, because they have some clients, let's face it, they'll shop 9 or 12 different banks, and then they come back and they're saying, I'm tired of all the back and forth and it's too much run around. Even those types of things. We want this to be an enjoyable experience. We want it to be fun. We don't want it to feel super taxing in that, at the closing, you're just exhausted and you're ready to get it over with. That's not the goal there. So even if there's that type of information of knowing, hey, he's looking at 2 or 3 different banks, I got you involved, just so we kind of know, okay, what are we competing with? Who are they looking to do business with? What potentially are they offering that I'll have to match, or whatever it may be, right? So, again, that's to my point earlier, I just try to eliminate as much back and forth and run around. I know your folks are busy, we're busy, so we just try to hammer that down and eliminate as much time in between as possible.
Yeah. Good stuff. Well, look, we're going to move on to kind of market trends and lender appetite for this last, segment and kind of portion of this roundtable. So I guess, this is just open-ended, both of you can answer, but what are some of the trends that you're seeing with regards to interest rates, loan terms? I know, Alex, you mentioned the Fed, they just talked about rate, they just raised the rates, but, what are some of the trends that you're seeing as a result of kind of finally being in a rising interest rate environment?
Yeah, so like you just mentioned, the Fed just raised it 1/4 point today. I was actually on a call this morning with some internal folks, just kind of discussing what should we expect, right? The market's kind of anticipating an additional 6 rate hikes potentially this year. To me, I don't know if our market could sustain that, right? That's a lot of rate hikes, and you know, to take a step back and kind of think about the impact of you know, 6 more rate hikes, 25 basis points each. That's a lot, right? And how is that going to impact real estate? How is that going to impact values? What's all that going to look like? Part of our discussion this morning was, do we need to kind of shorten some of our fixed rate periods so we can adjust as the market kind of moves? So I think you're going to start to see some of that. I don't know if you're going to see the 10-year fixed rates and the 15-year rates at super low rates continue. But I think that's something that we should definitely keep an eye on. You know, I was talking to someone the other day, how is rising interest rates, that borrowing cost going to impact your borrower when they're negotiating lease terms, when you guys are working with them? I think we're going to see significant impacts there. You know, it's already March, and if we're talking 6 hikes through the end of the year, I mean, you're looking at a rate hike every month, every other month. So I think the landscape could change pretty quickly. On top of that, part of our discussion was the market's anticipating another 3 to 5 rate hikes next year. So, I mean, we're talking substantial rate hikes in a very short period of time. You know, whether that happens or not, just having that discussion now is you know, I think we're going to see a lot of change come. And so it should be interesting to see how banks and credit unions adapt to that. But I would anticipate you're not going to see as many long-term fixed rate products. Now, banks will still offer them, but you know, I think those 10-year and 15-year fixed rates at 3% and change, I think that's gone, right? So interesting times for sure. I think that you know, proves the point that the broker, the lender, everybody needs to be on the same page, because we're going to see changes, you know, monthly. And so that could drastically impact a transaction that, you know, if you're working on a deal that it's going to take 6 months to put together, maybe a year to put together, financing obviously is going to have a significant impact to that. So, you know, keep that at the forefront and continue to have those discussions, because, you know, borrowing costs are going to continue to rise.
Right.
Right. Yeah, Alex hit it right on the head. That's, you know, about as spot on as you can get there. We do see that the rate hikes are coming. You know, the rates are going to go up. As a result, we're seeing a lot of folks, like Alex mentioned, shortening their terms for longer fixed term options. And I've seen a lot of lenders completely switch to where they're only offering, you know, 5-year adjustables, 7-year adjustable, those kind of things. Our group as well, you know, we're meeting pretty much on a daily basis to go through what we're seeing, anticipating, and, you know, how are we going to adjust and structure things moving forward. We haven't made a ton of changes just yet. We're still, you know, offering 10-year, 15-year fixed options. You know, I just quoted one earlier today that was right at 3.85. So, you know, some of those options are available. You know, obviously it's going to be for the right client, the right deal, you know, those types of things all play a factor. But you're going to see a ton of lenders switching to that model of, you know, 5-year adjustable, you know, something like that along those lines. So, you know, if you have someone that may be on the fence, I didn't, you know, start pushing on them and let them know, hey, these are coming, you know. So if they're serious about making a move and they want to do something soon, you know, the sooner the better. You know, our goal is always to give them the best deal possible. You know, so we don't want to have it, like Alex mentioned as well. You know, I hate to tell you, this is what we can offer and give you a great deal and they love it. And then it gets beyond 60 days when we can hold it and these rates keep ticking up, you know. So everything is, there's a lot of time factors mentioned into this, but, you know, we want to make sure that we're trying to get that process condensed as much as possible so that we don't have to go back to a client and say, hey, it's gone past the 60-day time frame or 90 days, whatever we set it for, and then, you know, have to say rates went up. We have to, you know, I don't like doing business that way. I don't want folks to feel that they get the rug pulled out from underneath them, but, sometimes those things do happen, especially in this type of environment. So, make sure that we're getting as much information up front, like I said earlier, and that we're processing needs, and clients are sending us financial documents as soon as possible, because the sooner we can get started on it, the better. So, and appraisals are taking 4 to 5 weeks right now for ones that I'm dealing with. So we're even seeing that is becoming a big factor for us. So we just need to keep communication lines open and make sure that everything's going extremely smoothly. And I like to make sure that the clients are informed about everything that's going on. So you probably get more phone calls from us in the coming weeks and months as this goes on, just to kind of settle nerves as they come up. But yeah, Alex nailed it. That's spot on.
Good. Yeah, thanks, Joe. So let me ask you this: is there a product type of preference that your bank or credit union is kind of aggressively seeking, that you're saying, look, these are our top 1 or 2 product types we really like to lend on right now? And conversely, is there a product type where either of your institutions saying, we're a little heavy on this and we're going to kind of pull back from making loans on this product type? What's your appetite for property types?
For LMB, we have buckets, right? And you guys have all heard that term before. So we monitor that closely. Even if we're close to filling a particular bucket, say hospitality, for example, for the right client, for the right transaction, we're still going to pursue it. It's just on the back end, that's stuff that we have to deal with. So, we look at hospitality, we're doing multifamily, we're doing industrial. Obviously we love owner occupied. All banks or credit unions do. But I think, multifamily has been blowing and going. So we're trying to be a little more selective. We're just not going to throw money at any transaction. So we're definitely open for business, Evan, but we want to make sure it's the right transaction, the right guarantors, the right borrowers, et cetera. And so we're not segregating any type of asset class. It's just we're looking at everything closely and just want to make sure it's a good fit for us and that it's a win-win for everybody.
Yeah, good. Thanks, Alex. Joe?
Yeah, for us, it's a lot of what Alex had just mentioned. I'm thoroughly apologize. I'm sorry. I'll join right back. Give me 2 seconds. I'm sorry.
Oh, we lost Joe. He'll be back in just a minute. We'll catch him on product type here in a second, but I guess Alex, is a follow-up on right. Oh, wait, there's Joe.
Yeah, I'm sorry. I apologize. I just got like 8 phone calls in a row. It's from my daughter's school, so I was like, well, let me figure out what that is real quick. Yeah. So going back to that, for us, and I laughed when Alex mentioned it, owner occupied. I love when I hear clients or prospects tell us, well, this bank told me they specialize in owner occupied real estate. And it's like, well, yeah, we all do. So, that's obviously a big thing for us. We're making a big push. One of the big things that I did when I got on with Xplore, obviously medical and healthcare professionals, that's a big draw. Every bank loves that one too. So we're pushing 90% loan of value on those is a big deal. So that's a big push for us right now. Large apartments, so we're still looking at that. Multifamily is always great. So we really, the only things that we kind of shy away from is going to be oil and gas, or if there's some sort of speculative, hey, I'm starting a storage unit and I've never done this before in my life. I've been a basket weaver during the day or whatever. Those are the things that it makes the deal a little difficult, where we kind of shy away from that. But we're certainly, like Alex mentioned, we're open. I love talking through all of them. If it makes sense, and it's a viable deal, we want to pursue it. So we may not be as picky as some of the other lenders out there, but we're certainly going to have our criteria that we want to have met as well. So, but those are the biggest ones for us.
Okay. Yeah, good. So Joe, as a follow-up, maybe shifting gears a tad bit, but on construction, with rising construction costs, it seems like, vendors and contractors are getting price increases, on a weekly basis. How do y'all account for rising construction costs during the underwriting process and with, construction loan terms? Do you want to talk about that, or can you speak to that?
Yeah, I mean, for us, that's one of the newer products that we've implemented into credit for Xplore this year. So with us, we typically will underwrite and put a buffer of maybe 15%, 20% over, and I underwrite it with that because I want to make sure that the client has enough space. I mean, we've all seen it. Typically there is over cost, or they're spending a little more than what they were supposed to. And then also you see that contractors may not, they may budget $600 for mirrors. Anybody that's built anything, of any size knows, sometimes those costs are a little bit, I'd say quoted incorrectly is the best way I can say it. But it's important for us. One of the things that we've brought in is there's a group by the name of AES, Asset Evaluation Services. They offer, and this is free, that you guys can utilize this for your own personal use, also for clients. It's a full software program that the client themselves, the general contractors, the bank, everybody has access. They go in and upload, their plans, specs, the whole 9 yards, any side draws from the contractors, all get submitted into there. It's reviewed by AES for accuracy. And then we basically, would contract them to send out an inspection, and they help with draws as well. So we've leaned on folks like that to, kind of assist with that. And then also built in that buffer, to help deal with those types of situations where, building materials skyrocket in cost. So we don't want to be on the outside looking in. We don't want to have a client have a bad experience when, they're 70% of the way through and they're looking at us for more money. That's all we've had budgeted or approved them for. So, we try to add that little buffer, make life a lot easier on everybody, so that in the event that it does come back later on down the line that, hey, we're going over or we need a little bit more, whatever it may be, it's already pretty much built into that we're okay with that.
Yeah. Yeah, Alex, any thoughts on that, on how y'all kind of account or mitigate risk with rising construction costs?
Yeah, so to piggyback off what Joe said, I think a lot of these construction projects, it's a case by case basis. So is it owner occupied or is it investment? If it's investment, who's our tenant? What's that tenant look like? That's going to lead, tell us kind of how much risk or are we willing or not willing to take. Just a caveat, we might reserve or require additional cash reserves. So, maybe it's a situation where they need to have on deposit with us some additional funds just in the event that the project kind of, construction costs, bids go haywire a little bit. We know we have some reserves to kind of help with the client to finish the project, but it's an issue that everybody's kind of dealing with. And who is the contractor on the project? I think is that contractor capable and do they have a reputation for coming in on time and bidding correctly? So I don't want to pigeonhole just construction altogether, but I think you got to look at everybody that's involved and make sure that, again, you underwrite the credit risk appropriately.
Good. Yeah. So, in the last 10 to 15 minutes here, I'd like to just open it up for, questions from the participants. If they have anything, just kind of a Q&A, and, anyone who's on the call, feel free to ask Alex and Joe a question, that you may have that we haven't asked. So, now's the time for them.
Yeah, let us know how we can help you close more deals. That's what the goal of this is. So, if there's any sort of gap or where you feel, hey, if your group is responsive, we'll send more deals your way, whatever it may be, so it could be as small as nobody picks up the phone at the banks that I call or anything like that. We certainly want to hear whatever pain points you guys may have in dealing with lenders or whatever.
Yeah, that's great. Yeah, anybody want to chime in on that? And maybe bad experience you had where issues have arisen and weren't able to be resolved and where deals were lost?
Alex, Joe, this is Archer Frierson in Shreveport. Thank you guys for your time today. I have a quick question. What is the appraisal process now internally for both you guys? I've just locally here, I've seen some appraisals that came across my desk that were, and I haven't questioned the banks on how they found the appraiser to do it, but a lot of times I'm seeing appraisers from out of town doing appraisals here locally that the appraisals are horrible, and I can't understand why they're not using local appraisers that know the market to do these appraisals and hiring somebody from Dallas or Houston or Atlanta to come in and do these appraisals. Can you shed some light on that for me?
Yeah, so good question. So I agree with you. It behooves me. I don't know why folks would use someone outside of the market. In Baton Rouge, we use, Cookmore, we use Murphy, we use some CBRE guys. So although CBRE is much bigger, obviously they have folks that are local and that can help us. So I think that alludes to some sort of cost benefit or maybe there's some process issues there where they feel like it's necessary to outsource that type of service. At L&B, like I said, we try to stay local. We do have the ability to use an appraisal that's up to 2 years old. So could that change in the near future, especially as, like I mentioned earlier, rates rising? Is it going to impact values? I could see us potentially changing our policy, but we can use an appraisal that's up to 2 years old, that's from another bank. We don't need the other bank to release it to us. All we need is it for the appraisal to kind of meet our guidelines, our expectations. And as long as it does, we're able to use that appraisal. But I don't know why you're running into that issue, except for the fact that I think it's more of a internal process that they're either trying to save money or trying to eliminate those types of issues. But for us, we try to stay as local as we can.
Yeah, and to piggyback on that, Archer, for us, we have our system that has all the approved vendors. So those folks have been vetted out, and usually what we do is kind of send a list of, hey, this is the deal, this is what we need. Hopefully, estimated turnaround time, we'd like to get it by X date, and then we start fielding those offers. So we may get 6 or 7 different ones, and then usually what I do is present that to the client, and the client will make a determination. Do they want to maybe pay a little bit more money for the appraisal because the turnaround time may come back a little faster, a little quicker, whatever it may be. But, to your point of the values, that's one of the big things, like Alex mentioned. I use local guys for that reason, because they have the knowledge, they know what the market is doing, and they know what's comparable and what's not, right? So, we certainly lean on guys that are local. But yeah, I mean, the only thing I can come up with for somebody coming out of market to come, appraise a property for you is either nobody else is responding, and I'm dealing with that too. I've made 8 phone calls in one day to 8 different ones and only got 2 appraisers on the phone. So maybe we're all in the wrong business. We should have all been appraisers, but it seems like their phones are ringing off the hook. Most of those folks are telling me, like I mentioned earlier, 4 to 5 weeks. So that's pretty lengthy time frame. The only thing I can think is they're overwhelmed with the amount of work. So maybe they're just reaching out to someone outside of the market that has the availability to come in and get it done quickly. It's hard to say, but that's some factors that may be brought into that situation for you.
All right, thanks. Appreciate it, guys.
Thanks, Archer.
And Archer, you can always tell them, hey, look, this is, if the client's putting 50% down, we may be able to do, depending on the bank or a lender or whoever, they may actually do like a title of, an opinion instead of a full-blown appraisal. So maybe we don't need to see this, massive value because they're putting down, your client's putting down so much. So just different factors there. If you, feel something needs to happen faster, feel free to call us, Alex or myself, and we can even tell you, hey, maybe approach it from this angle and see where they take it from there. Use us as a resource to help get these deals closed a little bit further, a little faster and more efficiently.
Will do. Thank you.
Anybody else on that? I guess maybe pain points you experienced recently with lenders that I guess would be maybe helpful for Alex and Joe to hear as they I guess continue to evolve their processes and procedures.
Evan, this is Richard, I'll jump in. Guys, thanks for doing this today. Really insightful. I get I guess the call at least once a year, if not more, it seems like, to update financial statements. I have my own statement, and now I'm starting to get this thing where they want me to sign some sort of I don't know what you call it, but some sort of a statement behind the statement that verifies it. And they're asking for more information, life insurance information. And it just seems like it's getting more and more in depth. Are you seeing regulators ask for more information as of late?
Yeah, well, of course. I mean, ever since 2008, I mean, it's been constant. We're regulated. We're 330 million in assets, right? So, yeah, it's one of those things. Don't beat your banker up too bad. It's not necessarily them. It's other folks that are breathing down their neck saying, "Hey, we need this information." It's unfortunate. You signed your name on that PFS, and I think that should be worth something. Different banks have different policies. So, we are not going to ask for additional financial statement information. We're going to provide you with the financial statement and have you complete it, and you sign it, and we're good for a year. So, different financial institutions have different policies. And it's not necessarily coming from them, it's coming from the regulators. So there could be something else that's forcing that institution to kind of gain additional information. But yeah, I mean, it's commonplace where, things are coming down, it's all kind of rolling downhill where they're asking for additional documentation.
Yeah, and to that point, as Alex can say, when an auditor comes in and they want to look at a file, we have to have documentation to substantiate, whatever the loan request is. And, if you're saying, hey, I have 5 million in marketable securities, whatever it may be, we may ask for additional documentation to confirm that and have that in the file. But in as much as I hate to say this, I'm not trying to throw anybody under the bus. But, Richard, one of the things I would mention as well is that's collecting information up front. I hate to keep harping on it, but when I'm able to dig through all those details and I can kind of understand, I'm sure Alex can say this too, we can kind of determine, hey, underwriting is going to want to have answers to these anomalies or, something that we see that may be off when we're reviewing financials. So if your banker or whoever you're dealing with isn't collecting enough information up front or understanding that and notating that to an underwriter, there are a lot of times that I've found, if I slip up and don't ask for something, underwriting ends up catching it. And that's where we're having to go back and forth and collect additional information, collect additional documents, and that's, again, trying to eliminate that back and forth. The more information we can have up front, I may be able to answer those questions and, iron all those details out where underwriting isn't necessarily coming back and asking for all of those documents or additional documents to support what has already been submitted. So that's kind of why I hate to say it, I do beat up people up front, but it's just because I want to get all that information to where we don't have to come back to you as many times at the very least. Usually we're going to have to come back at least once or twice. But when it's 4, 5, 6, 7 times, to me, that's, we should have collected more information and had more questions answered up front, if anything. But yeah, regulators too, they're pushing that down the pipe to us that we have to get that information.
Thanks.
All right, right, guys, look, it's 2:56. It's been about an hour. We appreciate y'all's time. Thank you so much for being on here. I guess we'll kind of conclude with this. One, we want to thank both LNB and Xplore as annual sponsors. Thank y'all so much for being sponsors. Thank you for kind of, giving us a little bit of an insight into your processes, your business, and kind of what you're looking for. And look, let me encourage our membership, send these guys deals, include them, pass their names along to clients, do what you can to kind of, help them get their name in the hat to, to lend money. So, yeah, look, we appreciate y'all's time, and I don't really think there's anything else. So, yeah, thanks again. And thank you, everyone that participated. Amy, do we have anything that I've left out?
No, just if we can see people for the crawfish boil, I think it'll be a great event in the spring. So May 19th, if y'all want to do that, our sponsors will be there. It's a great opportunity to network. We had a great kickoff to the year with the installation as well as the courses that we're doing. And anything else that we can do, just shoot us an email from a chapter standpoint. We want to make it happen.
Good deal. Good deal. Yeah. Thank you, Amy, Alex, and
Have a
Joe.
great day.
Yep.
Thank you, guys.
Yeah.
Take your time.
Y'all have a good
Thank you.
afternoon. Sure.
Yep. You too.